How's it going, guys? Welcome back to another video. Thanks so much for tuning into Stock Essentials. If you are new here, please consider subscribing. We make daily videos on stocks and options on the hottest stocks in the market. So today we're going to be going over the hottest stocks right now and which stocks. There's a ton of meme stocks right now. We're going to be going over which ones have the most potential because right now a lot of these meme stocks are very volatile and you might be wondering which stocks should you be looking at. So of course, we're checking out the WallStreetBets chatter, the most talked stocks on the subreddit, because WallStreetBets, if you aren't aware, is a powerful Reddit forum. They have over 10 million members, and basically they are pretty much big enough to move the market and influence stocks pretty heavily. So right now, as we can see here, the daily chatter, the top two are going to be CLOV, Clover Health Investments, as well as BB Blackberry, and both stocks are pretty much down quite a bit. Clover Health Investments had a pretty big sell-off today, so we're going to be going over whether or not you should pick up these stocks. Looking at the weekly top chatter over here, Blackberry takes the #1 spot as the most popular stock, being mentioned over 7,000 times, and the second runner-up is going to be CLOV, Clover Health Investments, being mentioned over 4,000 times. So there's a pretty big gap between the first and second most popular stocks, but I think these two have the most potential. Clover Health Investments is down a lot from its all-time highs, so it could be a pretty big dip that you should consider buying. And we'll be going over a little bit of some option strategies, what you should do to play these stocks because they are pretty volatile, and the premiums for the options are going to be high. So it depends on your risk tolerance and how much money you're willing to risk, because remember, these stocks are very volatile and don't put in any amount of money that you aren't willing to lose. So Blackberry is probably my #1 pick right now. It's under $15. It had a pretty flat day overall. Overall, it's down 4%. Not that bad, but it's pretty flat. But all-time highs for the stock is at $28.77, so almost $29. And Blackberry has a lot of potential behind it. It's the most talked about stock of the week on the WallStreetBets subreddit, and as we can see, I think there's still some juice in this stock. It's not as high as it was back in January, but if we get enough upwards momentum, we can see this stock absolutely explode. Blackberry down 21% in the week, but still we have to consider that it's up 82% in the past month. But overall, I think this at $15 a share, I think it's a pretty good price point, and you can either enter this stock using shares. That's probably the safer option compared to buying calls, or you could sell cash secured puts, which is my recommended strategy. We'll take a look at the options chain. Something like a June 18th or 25 expiration date would be pretty good. And keep in mind, this strategy, selling cash secured puts, is safer than outright buying 100 shares because we're lowering our cost basis. So if you were to buy 100 shares right now at $15 each, you would need $1,500 of collateral to buy the shares, because the share price times 100. Whereas if you sold a cash secured put, as you can see here, I'm selling a 13.5 strike. We only need $1,350 of collateral. It's going to be $150 less. And if the Blackberry goes below $13.50, we're going to be having to buy 100 shares at that strike price. So our cost basis will be $13.50 per share compared to $15 if you just outright bought shares right now. So it's a little bit safer, but the downside is if Blackberry skyrockets, you're going to be missing out on the profit because you're just going to be making the premium. But since Blackberry's options chain, the implied volatility is pretty high, the options premiums are going to be a little bit juicier, so that may be a play that you want to consider. And as you can see, I'm selling a 13.5. You could even go June 25. Something like a $13 strike will yield you $105 of premium. which is pretty good. You could either do the 13.5 strike for $135 of premium, and that's about a 10% return in just 2 to 3 weeks, which is pretty good. And it's a lot safer than buying calls, and it's a lot safer than buying stock, because selling cash secured puts is a neutral bullish strategy. So the next stock we're going to be looking at is Clover Health Investments. It's a pretty volatile stock. As we can see, it hit all-time highs of around $28, and it's down to $16. So it pretty much dropped 40% over the course of the day, which is kind of nuts. And I think that right now it's a pretty good buy, especially being down so much. As we can see on the WallStreetBets chatter, it's one of the most talked about stocks besides Blackberry. So if we can see a huge rally on the stock, it would be a pretty good investment to make. Of course, these stocks are very risky. Keep that in mind. So we'll take a look at the options chain, and if you want to be risky, you could buy calls, because the calls got absolutely hammered from this huge tank. Buying something June 18th would be kind of risky. Maybe June 25 would be the desired expiration date. So you could buy calls, but if you want to do something safer, like cash secured puts, I'm not sure why it's not loading. But cash secured puts would be my go-to strategy, of course, on these meme stocks to collect all the juicy premium. Yeah, so the options chain isn't really loading for me. I'm sure it'll come back when the market opens the next day, but you would want to do something maybe like a $14 strike. I think would yield you about $100 or so premium. Maybe the 13.5 could be a good one as well. But Clover Health Investments is a pretty volatile stock. The premiums are going to be high. There's a lot of people backing up the stock, and they're trying to rally it on WallStreetBets because there is a pretty high amount of short interest in the stock. People are just trying to run it to the ground, these hedge funds, and us as retail investors, we call ourselves, I guess, apes. We're trying to save this company. We're trying to pump it pretty much. We're trying to raise the stock price so the hedge funds have to cover their shorts, and they end up losing lots of money, which is, I don't know, I guess it's a good thing for the retail investors. It shows how powerful we are, and we shouldn't be taken lightly, and we don't want to be taken advantage of. So those are two stocks of what we're going to be watching, Blackberry and Clover Health Investments. These are very good dips to buy. And if you have cash on the sidelines, and if you're still holding like these call options for these stocks, you could just average down as long as the expiration date isn't too short. So I always like to buy call options. If I'm buying call options, I'm buying them maybe 2 to 3 weeks out, just to give me, even 4 weeks out possibly, just to give myself a lot of time, because if we have down days like this, we need some time to recover. So a lot of people who are holding call options are expiring tomorrow, June 11th. They're going to possibly lose a lot of money. So that's why a longer expiration date is going to be ideal. It gives more time for the stocks and the calls to play out. But that's about it for this video. I helped you anyway. Please leave a like, comment down below if you have any questions. As we saw here, I couldn't really access the options chain for Clover Health Investments, and that's one of the downsides of Robinhood. Sometimes it can be a little bit buggy, so our recommended brokerage would be Webull. Link in the description. If you sign up and deposit $100, you will receive 2 free stocks. And the best thing about it is you do get unlimited day trades, because if you open up a cash account compared to Robinhood, where you have to obey the PDT rule in your margin account. So if you're new here, please consider subscribing, and thanks for watching.